Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne with David Ingles.
Good Friday morning. Our top stories today. Stocks across the Asia-Pacific on the up after upbeat U.S. economic data signaling a soft landing for the economy. The Yuan erasing this year's losses amid broad dollar weakness. Now, Chinese President Xi Jinping meeting with U.S. National Security Advisor seeking to stabilize ties ahead of the upcoming November elections. And speaking of, Kamala Harris defends her policy shifts in her first TV debates, interview rather, as the Democratic nominee, as polls show her sustaining momentum against Donald Trump in some key states.
All right, happy Friday. We're taking a look at how markets are doing here this morning, of course, post NVIDIA sort of gloom, and you're seeing a little bit more of a rebound here today in Asia. Take a look at how things are looking at, and we're still set for global stocks to end the month the best since June. And this is after we saw record after record being hit, whether it's the Dow Jones, the DAX index in Germany, you have the Euro Stoxx 600 index, all touching a record on Thursday. So we're watching ASX 200 as well. We're very close to those levels when it comes to Sydney as well. Taipei also just opening up. We're seeing about 0.4% to the upside here, and the dollar as well. Quite a lot of superlatives when it comes to the dollar, and we're basically the Bloomberg Dollar Index set for the worst month in 2024. We got those Tokyo CPI numbers. They were hotter than expected, so there you go. You're seeing a bit of that strength coming back into the Japanese currency. We're trading just around the 144, 145 level here right now. Euro dollar is seeing a little bit of a pullback there of 110, but really we've been talking about that strength of most of this week already, and we're watching very closely what goes on when it comes to the Nikkei, right? So, you know, what a month it was. We're basically talking about the widest monthly trading range in 34 years, given what we saw on August 5th with this meltdown and whipsaw. I think it's about an 8,000 yen sort of kind of move that we saw. So that brings us back to levels that we haven't seen since 1990. But yeah, it was what we saw in the GDP numbers that seemed to have led to that yield curve to steepen a little bit here. Not much movement in treasuries this morning, but we are seeing yields pick up in Australia as well as Japan. The Golden Dragon Index, we actually saw a bit of a pop there yesterday and gains there of about more than 2.5% or so. So maybe that might bode well for how China opens up here today. We still talk about a lot of earnings, but it really is that dollar weakness that is fueling this renminbi trade that we've seen. The renminbi, whether it's onshore, offshore, has basically wiped out losses for 2024. ANZ also upgrading their forecast for their 2024 CNY estimate to 7 handle now, back from 720. So they're saying, look, this strength could continue for the next few months or so. That's certainly one to watch, Dave.
Yeah, and the fact that we triggered the 710 level might spur more flows.
Yes.
That's according to Barclays, for example. We get into that call later on. 200 billion is what they expect to go into. You know, a lot of these corporates are sitting on dollar investments outside China, so that might trigger some inflows back in, which is why we're looking at many things currency today. So on the fix itself, we've seen more days than less days in the last, I would say 2 weeks or so, where the fix has come in actually weaker than the market estimates, which I guess underscores the current reality that the PBOC doesn't really need to lean into the currency as much given the dollar weakness. Speaking of weakness, the equity markets, particularly onshore, I think we're down 4 straight days on the CSI 300. We're down 4 days on the Shanghai Comp. Well, that has come down. What's come up expectedly so, is this national team buying and some of the ETFs that track some of the big benchmarks. Turnover, I think yesterday combined, when you look across those major ETFs, was the highest of the month. More on that in a moment. Earnings, retail sales are coming through out of Hong Kong later today. And, of course, energy stocks, if you had to pick one outperforming sector within the equity market, has really been energy names as well. Speaking of earnings, a snapshot of some of the big names coming through. So you have the biggest bank, you have some of the biggest developers like Vanco, for example, China Eastern following the reporting of Air China, and of course China Southern this week. So yeah, and we are about 80% into the earnings season. So in about this hour, we'll further unpack the story on earnings and really what we've seen so far and the trends that have emerged. And contrary, I guess, to common narratives out there, we've actually seen a lot of the sector groups deliver quite substantial earnings growth from last year.
Yep, certainly. Let's get the take from Thomas Taw, head of APAC investment strategy at BlackRock. It continues to be an equity story in some ways, even after what we heard from NVIDIA. I'm just wondering, this rotation away from the whole bubble trade to the broader breadth trade, do you think that can continue?
I think so, and it looks like it will. I mean, the U.S. economy looks like it's moving from very strong to strong. Obviously, the data is lagging, so that's always something to watch out for. Credit spreads are relatively tight. This concern around U.S. recession has obviously come down. It's still something to look at moving into next year. We will get a recession in the U.S. at some point. Let's not forget that. But I think moving into next year, it's certainly lessened. And so, with the economy doing well, and also when you look through the past earnings season, Mega Cap 7 actually did pretty well. Everything outside of energy did pretty well. And so, with the expectation of Fed fund rates coming down, smaller companies that need to borrow money, they look good. Their laggards, their valuations look good. So I think the rotation trade can continue. I think the AI tech story is kind of one maybe to park for next year. I think we'll continue to see some rotation, particularly going into U.S. election and so with all the geopolitical risks that are around at the moment. Maybe a little bit of profit taking in that area, but still long term the growth will be there.
On an index level, and what does that mean? Because you know, if you had the Mag 7 taking a step back, you get a broader market rally, though. I mean, do we hit higher highs, though, on the index itself, or do you think this is where we'll be for the rest of the year?
I think we'll be relatively range-bound for the rest of the year. I mean, again, we haven't really even seen the volatility on geopolitics or on election coming through yet. So, I mean, that will play out more on kind of a sector level. We're looking more at sectors that we think could do well under either party. Mostly in U.S. banks and U.S. energy, and it kind of plays to the whole theme that I think is gonna be around for the rest of the year, which is go domestic. So domestic in the U.S., U.S. banks, U.S. energy, domestic in Asia in terms of where are the economies that have less exposure, less trade revenue to China and the U.S., India, Japan to some extent because Japan is obviously a big exporter. And I know you're going to ask me about Japan, whether that bull market is now over.
Yeah. Is it?
I don't think so. Okay. A lot of questions on JPY carry trade, unwind. Yeah. Let's not forget that was one of the easiest trades in the market for 3 years. Borrow JPY and basically buy anything, supersize your returns. And that trade basically got unwound in 2 weeks. So the volatility is still there. The volatility was there. I don't think anything structurally really has changed in Japan. A lot of faith being put into the Japanese consumer, but I think that's the second phase of the bull market. It's kind of more about less index level. We've seen the index guys mostly sell out, and now it's kind of more active exposure sector. Where the earnings growth actually going to be in Japan.
Another popular trade earlier this year was just put my money in a T-bill. This whole T-bill and chill strategy. Yeah. Do you think we've come to an end of that now that rates are coming down? Because we're still seeing quite a lot of inflows into these money market funds.
Yeah, I mean, we hope so, because that will. I don't think it's a question of move out of money market funds and then put it into equity markets. I mean, generally after the Fed start cutting, the first stop would be something like investment grade, short duration treasuries. We've kind of seen that at the margin in terms of ETF flows, but people just keep moving up and down the duration bucket in ETFs, and that's kind of the primary question: is like how much duration risk do you want to take? That move happened very, very quickly. Right. So now it's kind of a question of we were looking more in the middle of the curve, 3 to 7 years, and then within 1 week we were kind of at where we thought we would be by the end of the year. So I think 4 rate cuts by the end of the year is pretty optimistic. I think now is probably we would be taking a little bit of duration off the table.
What is, and speaking of, and you can answer this whether that's through an equities or fixed income angle, what's the best case scenario next week when we get the jobs report?
I think the best case scenario is that there is some decline because it is on a 6-month lag, but we don't see a huge precipitous decline. Okay. That the data will continue to weaken, but then you kind of have to marry that off with how much is inflation coming down in the U.S. because those are all lagging factors. But as we all know, the U.S. is a very much service-driven economy, and so if the jobs aren't there, the spending isn't there, where do you start to look? And for us, like riding out the rest of this year, we're looking more at kind of minimum volatility type of strategies. We have these buffer ETFs that investors are liking. kind of minimize drawdowns. We don't want to say, get out of the market, go into cash.
Are you seeing flows into that?
Yes. Yeah.
Okay.
Yeah. A lot of interest. Also, the rotations on factors. It's been all quality over the last couple of years. Quality is pretty much tech growth.
Right.
So now kind of a shift into things more like value and those kind of exposures. So that rotation, I think, is real. It's only really just started on the sector level in ETFs, but I think that will probably continue.
Another thing you're looking at is, of course, U.S. election risk.
Yeah.
The best way you say to hedge is to go domestic. What do you mean by that?
Well, in terms of, the outlier is obviously if Trump gets back in and there's a red sweep. And the reason that's an outlier because his rhetoric is a lot around increasing tariffs, right? So there's a couple of scenarios. Either he talks about a 10% tariff universally on imports into the U.S., up to 60% on China, or both. Quantifying the inflation impact of that is obviously difficult, but essentially looking for the domestic sectors in the U.S. which are less exposed to global trade because it will be a U.S. story. And then outside of that, where are the economies which are less dependent on global exports, U.S. exports, China exports? So basically looking outside of places like Taiwan, South Korea, more at India, Japan. I mean, China is very much domestically driven as well, but we're not really seeing. I think I've got one question on Chinese equities in the last 6 months. So.
Yeah. And the question was what?
Should I buy it?
Okay, and the answer was?
Not yet.
Not yet. Well, I was going to ask you, too. I mean, we were just talking about this before the show started, right? The China show. The market's been extremely quiet. I mean, you've had one or two earnings standouts on both sides, but it's not featuring at all into your conversations with clients at all?
No, I mean, it's this year and actually last year as well, it's been very much EMX China. Okay. I mean, that's been one of our most popular exposures across, different jurisdictions.
Right.
China is kind of being treated as a separate asset class, separate satellite type of exposure at the moment. Foreign investors are not really looking at it, but I think the story is kind of the same. It will be a trading market. If something changes and the PBOC becomes super quantitative easing, then foreign investors will return. But it's still not a long-term story, I think, for most investors at this point.
People have been talking about the characteristics of being, it's not correlated to many markets, and given the volatility we've seen, that's the silver lining in all this. do you see that as a positive?
Yeah, I mean, it is uncorrelated. That's a good thing. But most of the other markets are going up, so uncorrelated is not really great in that circumstance. But I mean, look, I think at some point investors will start to look at it again. Yeah. A couple of rotations happening when the Japan sell-off was going on. Yeah. India, we like it, but it is kind of expensive. So I think at the margin, I wouldn't say be underweight at this point, but I wouldn't say be overweight either.
Okay. Thomas Stahl, thank you so much, sir. Nice to see you. Have a great weekend. Head of APAC investment strategy there at BlackRock. Counting down to the open of trades, about just 17 minutes away. A view of Hong Kong. Of course, it's been very humid and wet in the city. A bit of rain, in fact, I think last night going into early this morning. But you can take your umbrellas and bring them along, but no need to flash those expensive LV umbrellas. No need for that in any case anyway. There we go. 0.1% to the upside. The opening bell 16 minutes away. All right, so the reference rate of the day is out, 7-11-2024. Again, by the way, on the weaker side of estimates, which is not surprising, but it's fairly a more important signpost today, given the massive drop in dollar China yesterday. In fact, I think dollar onshore saw the biggest drop this month, which is why we're looking at a level below the 710 handle right now on the offshore rate. We'll see what the onshore rate opens up, given where the goalposts are going into the Friday session. Let's bring in Tanya Chen, our Asia FX and Rates reporter, to just wrap up this week for us. Eventful Thursday, of course. People that you talk to, what's the near-term direction you feel on dollar China?
Yeah, so yesterday was kind of when we breached the 7.1 line, 10 line, and that seemed to be quite a big psychological level for the exporters. We've been hearing a lot about this avalanche of repatriation flows that is meant to kind of boost the yuan as people convert their overseas holdings back to the local currency. And maybe we're just starting to get a glimmer of it. I mean, so yesterday we saw the onshore yuan erased all of this year-to-date losses, and exporters were kind of waiting for what the right moment is to kind of convert back, right? Today on the fix, it's, broadly in line with the estimates. It is slightly stronger than what we've seen in the past couple of days. But there's been a lot of interesting kind of calculations around what the repatriation flows might look like.
Yeah, I was going to ask you about that. Stephen Den, this is from Horizon. He made that call about the avalanche.
Yeah.
He's talking about like $1 trillion.
Yeah.
Is that manageable? I mean, what are other people saying now?
So he was saying like you could see a 10% rally, right? Macquarie, they were saying 300 to 500, I think similar with JP Morgan. Lemon Zhang at Barclays, she's on a more conservative level. If you look at $200 billion, if you put this all into context, that's actually potentially something that the market could actually absorb within a week. If you look at the kind of daily average turnover for, I think, just yesterday, it was around 50 billion. So actually, after kind of absorbing all of the losses, what is next for the yuan? And actually, some of the market is still very, very bearish. There's the geopolitical risk, the U.S. election, the tariff risks. You still have some shops out there who are seeing 7.4, 7.35 for the yuan.
Just to complicate the matter, of course, this week, I think there was speculation in the market around the PBOC and when they might start buying and selling CGBs because of that new part of the website that they put up as well. And I'm wondering, to your point, Tanya, do you think, well, the people that you talk to, do you think they'll need to come in and mop up excess liquidity? Can they mop up excess liquidity if in the event, of course, we do get, the billions coming in?
Yeah, we're actually hearing a lot of different sides to this story. Yesterday, when we broke that, they had introduced this new bond section. It had stoked speculation that they were going to come in and start doing the buying and selling. And actually, we're now hearing more that it's kind of more of an administrative move, and that maybe we shouldn't be kind of speculating so much that the PBOC is going to be kind of taking a hand into doing all this kind of liquidity excess management. And in terms of just kind of overall in the yuan, I think there are still capital flight risks, right? I mean, you had Thomas Taw just talking about how bad Chinese stock markets are right now. So there's still this disconnect between the yuan and Chinese assets, and we have to kind of go from there in terms of the macro environment.
There we go.
All right, Tanya. Thank you. Tanya Chen there, our Asia FX and rates reporter joining us. Pre-market in Hong Kong is opening up, and we're seeing some modest gains here right now. But, just for this month, I mean, Hong Kong has done okay. We're up some 3% or more, so still set for this best month since April. We've got plenty more ahead. This is Bloomberg.
Good Friday morning. Welcome back. You're watching the China Show. So there's an ongoing interview right now with Kamala Harris with CNN. And just to recap some of the latest headlines coming through out of that interview in the last, 20 minutes or so. So I think they're talking about inflation here. Prices do remain, she thinks, still quite high. In terms of fracking, quite clear, the line coming through that she will not be banning fracking. Speaking of clean energy, that clean energy can grow without the need, of course, to prohibit fracking activity. And as far as the diversity of opinion, she says she will continue to seek that as well. And she will, of course, press for this bipartisan border bill. So far, that's what we have in the last 30 minutes or so. In fact, we did hear also from the vice president talking about effectively defending her change in policy on some matters. Let's listen into that.
Dana, I think the most important and most significant aspect of my policy perspective and decisions is my values have not changed. My value around what we need to do to secure our border, that value has not changed. I spent 2 terms as the Attorney General of California prosecuting transnational criminal organizations, violations of American laws regarding the illegal passage of guns, drugs, and human beings across our border. My values have not changed.
And we've got the latest Bloomberg Morning Consult poll, which actually has Harris leading Donald Trump, or at least tied in all 7 battleground states now. Now, this poll was conducted after last week's Democratic National Convention, so it seems like this honeymoon period for the Harris and Walz ticket continues here after, of course, that DNC. It's interesting how you see the breakdown of these swing states as well. Nowhere is it more striking than in North Carolina. This is a state that has basically been red ever since Barack Obama, that actually won there back in 2008. So at that point, back in April, Trump led by 10 points, and now Harris has about a 2-point lead there.
Yeah, let's bring in our California Bureau Chief, Karen Breslau. I mean, Karen, thanks for joining us, by the way. I mean, you've covered Kamala Harris as she rose through, of course, where you are in California into the biggest battle of her political career. What struck you the most in this first major interview?
What struck me is that she is very much the Kamala Harris that I knew as District Attorney of San Francisco and Attorney General of California. She really controls the conversation. So she's not fond of being questioned. She's much more comfortable being the questioner. And I think you did see a bit of tension and some occasional flashes of annoyance at having her tactics or her policies questioned. She's a more serious and contained person in an interview, particularly when she's being challenged, than she is in the, great political theater of the convention or the rallies that she's been holding, or in meetings with younger voters. In more relaxed settings. So it struck me as very consistent.
And this latest poll that we have, where she is leading or tying and being tied in all these swing states now, I mean, everyone's been still questioning this ascent that she has been able to go through in just a matter of weeks and months. What do you think explains Harris's steady rise in these swing states?
Well, a few things. One is that the states where she has focused have electorates that are younger and more diverse, less ideological. And so she and she's appealing to younger voters and to women. So particularly in North Carolina, where, as you mentioned, Obama hadn't won since 2008. She's made 16 trips there as vice president. It was almost as though she were, subconsciously preparing for this moment, and has had a very good, not only messaging, but also a very good ground game, and particularly after the overturn of Roe v. Wade by the Supreme Court, she became really the leading voice of the administration, and so did a lot of the groundwork in the states that are now swinging in her favor.
Karen, a pleasure to have you on the show. Thank you so much. Let's talk again. Karen Breslau, there, California Bureau Chief. Going into the opening bell today, just over 3 minutes away, we're poised for a flat open in Hong Kong. Although when you look at things onshore, we are on track for a lower open to our 5th day of declines on the CSI 300.
Welcome back. You're watching the China Show. We're kind of down to the open of markets there. And yeah, it looks like we're set for a pretty flat sort of open on this Friday morning. But Key, look at that dollar-China trade. We are now at 708 levels for that, and wiping out really the losses for the renminbi all of this year. Obviously, a lot of it has been driven by this dollar weakness, Dave. But yes, you talk about this repatriation flows back into the renminbi. Is it going to be an avalanche? Is it going to be a tsunami? Or is it just going to be a little wave? That's one thing everyone's debating about now.
Yeah, and not to mention too, because it's month end, you're getting a lot of the exporters also that were sitting in U.S. dollars that obviously maybe don't have that much need to sit on dollars anymore, exacerbating that. I think suffice to say, we don't know, of course, how much more we'll get, but there is momentum, a lot of momentum to the downside. On dollar China, in fact, here. So, just very quickly, when you look at this, of course, we are looking at, and speaking of downward momentum, it's really picked up this week. A 4th day yesterday a fifth day so far today, although we are slightly on the flattish side of things. 28.19 and 32.76. So we're about 25 points below where so far up until a few days ago that 3,300 level actually held on the CSI 300. We did see a pickup in volumes yesterday. The reason that's material, I'll tell you in a moment. Hong Kong, please, let's have a look at that. Within the global equity market story, outside of NVIDIA, by the way, and outside of the Magnificent Seven, things have actually been very good. So in Europe, right? In Europe, you have the DAX, you have the Euro Stock 600 at a record, you have the Dow at a record, S&P equal weighted is actually also at a record too. So Australia, speaking of the Asia Pacific, hence we're up 0.5%. It's within 1% too of its own all-time highs. It's not really playing out as far as this very range-bound market is concerned. Although that said, of course, 18,000, we haven't been at this level in several weeks as far as the Hang Seng goes. Right. Companies reporting earnings today. China Construction Bank, ICBC, Ag Banks also coming out with earnings. And also these other companies are set to report. So we have at least 30 big companies reporting earnings today. Of course, we'll be looking at China Vanco very closely on the back of it being still a bellwether, of course, for the property sector. Right. We talked about market support, and I think I alluded to that earlier on. So, this pop in ETFs and the turnover we've seen recently. So yesterday, the combined turnover in a lot of this, the CSI 300 ETF trackers, actually at the most so far this month, which I guess indicates the presence or signals the presence of market support from China as it tries to keep, of course, the market stable, Yvonne.
Yep, and certainly we're still focusing on earnings and some of the major banks in China reporting yesterday as well. Bank of China, being one of them, has announced its first interim dividend since becoming a public company after reporting a drop in profits. We're also looking ahead to earnings reports from ICBC, Ag Bank, and China Construction Bank as well. Let's get to Francis Chan, Senior Banking and FinTech Analyst at Bloomberg Intelligence. He joins us now. Overall, your take so far on these bank earnings?
Well, I feel the signals from the already published bank's results. First of all, we see stabilized margins on a sequential basis, which is a positive sign. But we see a new risk in terms of lending growth. Lending growth in the past for the whole system or for individual banks, maybe for the full year basis, double digits should be expected. But based on what we have seen so far through this year through June, maybe this year many of the banks can only hit high single digits in loan growth. And some of the banks only looking at the second quarter profit, it could be up year on year. But overall, if we look at the first half numbers as an aggregate, revenue is still a big problem, although some of the banks can still boost their profit by reducing the credit costs.
Yeah. What do you still see as some of the risks that lie, whether it's fees that might still remain weak, margin pressures that could linger?
Yeah.
What are some of the other risks that you're looking at?
Now, more analysts or market participants may be focusing on the personal loan quality, including mortgages and credit card loans in China. It's creeping up. It's not alarming yet. But obviously, the management have also talked about this specifically to handle the market's questions.
Okay, Francis, thank you. Francis Chan there, our Senior Banking and FinTech Analyst at Bloomberg Intelligence. Wrapping up what we've seen so far when it comes to the bank earnings season. And Dave, you're looking at a bigger picture here on how things are shaping up so far.
Yeah, but I think it's safe to assume that what we'll see, and we still have a lot of companies set to report. That said, we're about 80% in, so I think the trend is likely in. We're looking at earnings through, here's your fancy word for today, two vectors here, so surprise and growth. We'll start with surprise. So relative to expectations, where are we? About 80% in, as we mentioned, nearly 60%, as you can see, 57% of MSCI China individual stocks have disappointed relative to estimates. Now, in terms of where we're seeing relative delivery as far as sectors go, the three best and the bottom three as far as sector goes. Aggregate surprise. So as a sector, what have surprised the most? The upside, utilities, comm services, and consumer discretionary. On the opposite end, worst relative to expectations are you have IT and some of your big tech plays, of course, and some of the material plays given the cyclical weakness we're seeing there, of course, in the economy. That is, of course, also relative to where we are in the property sector. More on that in a moment. Now, as far as the sector breakdown based on earnings, right? So in terms of the second vector of growth, which sectors have been able to deliver at least higher earnings this time around compared to this time last year? it's very simple and clear cut here. 10 out of the 12 sectors have managed to deliver profit growth. MSCI China, on an index level, so far for this quarter has delivered 15% growth. Now, similar to what we showed you earlier on in terms of sector breakdown, which one delivered the best and the worst growth or contraction in the opposite? Of course, sectors that fared the best, unsurprisingly, you had consumer staples, communications, and consumer discretionary. So this narrative of a weak consumer, while that does hold water, you are still getting some earnings growth in a lot of these consumer-facing names here. Unsurprisingly so, the worst in terms of on aggregate has been real estate. And profits there, as you can see, have shrunk by about a third. Yvonne.
Yeah, for more on the earnings side, Dave, let's bring in our Bloomberg Intelligence equity strategy analyst, Marvin Chen. Overall, your take on the earnings season so far?
Yeah, that was a good breakdown by David. We are seeing some positive surprises and upward earnings revisions, particularly in the tech and e-commerce platform sectors. But, this earnings season is a bit different. Markets are not reacting to earnings, really. It's really been about the revenue outlook and the top line growth. So for China's Tech 8, most have beat earnings, but those that have delivered this strong top line growth, such as Meituan, Xiaomi, these have seen positive share price reactions. But the overall takeaway, I think, is that, the revenue outlook still remains challenging and, there's still lingering consumer weakness. And this has kept markets somewhat range bound this earnings season. And this is somewhat different than the first quarter, where results actually, during the April-May actually contributed to the China rally. And, back then hopes were much higher that, this is the year that we see a turnaround in housing and stabilization in the consumer. But now, this is taking longer than expected.
Yeah, and I think the standout in terms of specific names so far, to your point, markets have been jittery to react. It's been PDD, right? Yeah. A little bit of guidance lower, arguably the best performing in terms of growth ahead, but markets sold it off 30%. Where does it leave the outlook then for the broader market?
Yeah, I think, China stocks will still struggle to regain some of the momentum that we saw earlier the year. Apart from, the longstanding issues, geopolitical tensions, housing, we also see that the strength in the China bond market as a sign that investors may be souring on the longer-term growth outlook. They're allocating more to bonds over equities, even despite the historically low yields. And, we're seeing this risk aversion play out in the equity markets as well. The high-yielding stocks are outperforming growth this year. And this all boils down to the macro outlook. We're seeing GDP revisions for this year heading lower again after rising for much of the year. So both the shorter-term and longer-term outlook are quite challenging right now.
Yeah, and so it begs the question. We had a guest from BlackRock, Tommy Toppy, saying I think he's only fielded one question about China over the last few months, and the question was whether to buy or not, and his answer was no. Where does it leave where investors should be positioned right now? Are there other Asian markets that are looking a little bit more promising?
Yeah, so for China, we still think investors should kind of adopt a barbell strategy, mainly focusing on yield. This would be utilities and financials, as well as tech, which is the main driver of the earnings growth outlook. For other markets, we think Korea is an interesting value play. Similar to China, it has low single-digit forward multiples. Yep. It has one of the strongest growth outlooks over the next year, and it also is less exposed to geopolitical risk. Also, we just had the NVIDIA earnings. Obviously, investors in the region will have to take a view on the AI and chip demand. But there are some markets that can benefit from the upcoming Fed easing without some of the Fed noise. If we look at some of the Southeast Asian markets, they have started to outperform over the past month, particularly in dollar terms, amid this kind of tech-driven volatility.
Marvin, thank you so much. Have a great weekend. Marvin Chen there, Bloomberg Intelligence equity strategy analyst here. Right, just ahead here, we'll have more on the China earnings story, of course, focusing on the EV sector, and HSBC joins us in the next hour of the China show. So their calls on the likes of BYD, Li Auto, and XPeng. So the head of autos research will be joining us for more analysis on these things moving forward. Yeah, and sticking with China, we could soon see maybe a potential blow to its efforts to develop a world-class chip industry. And we're hearing from this Bloomberg scoop, the Netherlands
plans to limit ASML's ability to repair and maintain its semiconductor equipment on the mainland.
Yeah, so a lot of the earnings story here has really been around the NVIDIA story too. And certainly with the geopolitical tensions coming through, and I think one of the angles to the NVIDIA story, I think was yesterday, I think you're off, is, it was priced for perfection even if they're not able to sell what they want to sell in China, right? And it goes to show the geopolitical angle to, what that means for an earnings or a revenue outlook. The same with ASML, for example, which is a Dutch firm right now. So, yeah, I mean, let's get more in the story here. Belle is with us, of course, our tech reporter with this Bloomberg Scoop. Belle, what do we know?
Well, this is a Bloomberg Scoop, as you said, and so we're getting some exclusive details here around the ability of ASML to service and repair its machines in China, and we can get more on that in just a moment. But it is suffice to say that this would be a very critical move and have really big ramifications for China's biggest chip makers, the likes of Huawei, SMIC, that are relying on ASML's machines for their advanced chip making. So it could really hinder their ability to develop even more sophisticated semiconductors. But according to Bloomberg sources, we're hearing that the Dutch government is likely not to renew certain ASML licenses to service and provide spare parts in China when those licenses expire at the end of the year. This hasn't been confirmed yet by the Dutch government. We also haven't had any sort of reaction from ASML, but it is certainly a signal that ASML and the Netherlands, of course, is facing quite significant pressure from the US administration that's really trying to curb China in this area.
All right, Belle, thank you. Annabelle Julius there with that. More on that Bloomberg Scoop as well. And despite investor disappointment in its latest sales outlook when it comes to NVIDIA, the company still remains one of the world's main players in AI. Bloomberg Originals has been looking at the chip company's humble beginnings and how the gamer tech laid the foundation for its meteoric rise.
NVIDIA, now one of the world's most valuable companies, emerged from an industry often misunderstood: gaming.
This is the Xbox.
The public witnessed the first major triumph when, in 2001, Microsoft's then CEO Bill Gates decloaked his company's inaugural competitor in the console gaming battlefield. It was a vital stepping stone that aligned NVIDIA hardware with PCs bought by hardcore gamers keen on upgrading their computers' components, something they couldn't do with consoles.
But something else happened during those 20 or so years. People started to ask, if these things are so good at transforming code into people and vehicles, could it work the other way around?
GPUs excel at something called parallel computing, taking a complex problem, dividing it up into small sets of calculations, and solving them in parallel very quickly.
A lot of the time, you see that there are runs on these graphics cards because they have a lot of applications even outside of gaming.
More recently, companies acquire GPUs en masse for use with artificial intelligence. OpenAI's ChatGPT, for instance, uses NVIDIA hardware. NVIDIA became the leader it is today by advancing technology designed for games but valuable to disparate industries. It knew far in advance that to succeed, it needed gamers.
And subscribers can watch that Bloomberg Originals documentary in full. Right now it's on the terminal. It's also on Bloomberg.com. It will also show up on their YouTube channel later on today. Right, just ahead, Xi Jinping hosting the U.S. National Security Advisor, of course, in Beijing as both sides seek to improve strained relations. We'll have the details of that meeting. Up next, this is Bloomberg. All right, just an update of markets 16 minutes in. Wow, check that out. Reversal in the CSI 300, so 3,300 still holds as that line in the sand. We're now 0.8 of 1% in opening 15 minutes.
Yeah, let's talk a little bit more about what's been going on in Beijing. Chinese President Xi Jinping met with the U.S. National Security Advisor Xi-Sullivan, emphasizing the need to improve relations.
As two major countries, China and the United States should be responsible for history, for the people and for the world, and should be a source of stability for world peace and a propeller for common development. While great changes have taken place in the two countries and in U.S.-China relations, China's commitment to the goal of a stable, healthy, and sustainable China-U.S. relationship remains unchanged.
Let's get to our China correspondent, Min Lo. It's quite rare, I guess, for this meeting between Xi as well as Sullivan. What do you think was achieved?
Yeah, they had a one-hour meeting, and this was really an opportunity for President Xi to sit down with someone who is the architect of those U.S. tech curbs on China. And President Xi started the meeting saying that he hopes the U.S. will meet China halfway. He hopes the U.S. will view China's progress so far with rational eyes. But you have Sullivan, on the other hand, kind of vowing to stay the course on these tech curbs, saying that, they have been successful, that it's important to keep up these efforts to prevent the tech transfers from undermining U.S. national security. So you have a whole laundry list of issues from the South China Sea to Taiwan to Russia, where neither side is willing to compromise. But nevertheless, Sullivan is saying that this is still a very valuable meeting nonetheless, because both sides were able to explain their intentions to each other. He was able to hit back against the Chinese narrative that U.S. is trying to contain China. He said that's not what the U.S. is trying to do here. So that would at least go some way to prevent a conflict that comes out of a misinterpretation of each other's intentions.
He also backed the Vice President, Kamala Harris, of course, in her experience dealing with China during this trip. What do we know about that?
Yeah, so this was in his press briefing on Thursday at the end of the 3 days meeting, where he talked about how Kamala Harris had been a key member of Biden's foreign policy team and how she has had engagements with President Xi and also Premier Li, so she's a known entity to them. So this is the clearest remarks yet from a high-level U.S. official to kind of establish her foreign policy credentials here, especially given some of the criticisms that she doesn't have enough interactions with China. She hasn't traveled to China in her capacity as vice president, and she only met President Xi very briefly in 2022 on the sidelines of the APEC summit, and her experience really pales in comparison to the vice presidential candidate Tim Walz, who has visited China something like 30 times. So in some ways, you get a sense that this visit is perhaps trying to lay the path for a transition to a Harris presidency, and some analysts say to Trump-proof the relationship to ensure that any achievements so far wouldn't be undone by a potential Trump presidency as well.
Min, thank you so much. Min Lo, our China correspondent there. Just going into this short break, we're looking at a Hang Seng Index now flirting with 18,000 in the opening 20 minutes of trade. First time in several weeks do we get above that level. More on the market story just ahead.
Welcome back. Here are some big corporate stories we're following for you today. Nippon Steel says the Japanese government needs to impose an anti-dumping tariff on Chinese exports to protect the domestic industry. Nippon says the firm is lobbying the government on this issue alongside other steel makers. And it says others, including the U.S., Europe, and South Korea, have already done so, leaving Japan vulnerable if it doesn't follow. Bloomberg sources say Couche-Tard is seeking backing from some of Canada's biggest pension funds to support its pursuit of Seven & I. Sources say the retailer is looking to raise $7 billion from the National Pension Fund, as well as those in Ontario and Quebec. Couche-Tard is also said to be weighing a range of funding options, from debt financing to issuing stock. Lululemon has trimmed its sales and profit outlook for the year as inflation and increased competition curbed demand for its pricey yoga pants. Comparable U.S. store sales fell 3% in the second quarter, missing analysts' expectations. Now, Jeffrey says fashion is shifting further away from Lulu's core offering, but Webush thinks the guidance cut could offer investors a reset. And Bloomberg's been told Samsung is among the suitors interested in Nokia's mobile network assets. Sources say Nokia has considered several scenarios, from selling some or all of the division to spinning it off or combining it with a rival. Now, that's amid increasing pressure to find new growth in the troubled telco equipment sector.
Yeah, in case you guys just heard me inject some commentary there under Lululemon, Insider Baseball, I have a love-hate relationship with the brand.
He's been targeted with lots of ads.
Yes, which I've been trying consciously to unsubscribe myself from to no avail. You know, I'm guessing I'm going to get another email yet again. So anyway, I just let it pass. Let it be. Okay, earnings. New China Life Insurance. Great Wall was actually, so Great Wall, since we're looking at the stock here, up 4.5%. Cut to neutral, in fact. A&H shares at JP Morgan, although underneath the hood, a jump in inline earnings and improved sales outlook also helping the stock along. In fact, speaking of Great Wall Motor, in the next about 15 minutes or so, we'll be speaking with HSBC, Qianhai Securities, and the head of autos research, what their top picks are as far as the auto sector as we wrap up the earnings season, what they've seen. And you know what? I'll give you guys a clue. It doesn't look good for the smaller EV makers, looking at where the trend is going. So stick with the BYDs of the world. Okay, I've given you a bit too much. Okay, benchmark level. We're up now, session highs on the CSI 300, 0.9%, up 1% on the Hang Seng Index. So if you like nice round numbers, 18,000 on the Hang Seng, 3,300 on the CSI 300. And we're still looking at some strength coming through in the currency, right? 709.40 and 709, a little bit below that, I think, on the onshore rate. Speaking of earnings, we have around 30 companies set to report earnings today in China. Some of them, of course, the big banks. So you had Bank of China yesterday. We're wrapping up the big four banks today with ICBC, China Construction Bank, and Ag Bank. And, of course, take your pick as far as some of the big sector bellwethers are concerned. Vanco, of course, very much in focus given where we are there with the property story. Right, global macro movers. As we wrap up this week, we're looking at a flat week across most global benchmarks, although, you know, we've actually done and fared fairly well given the drag we've gotten so far from the likes of NVIDIA. More on the market story just ahead. Happy Friday.
All right, welcome back to the China Show. Here's a look at the HSI half hour into the session. Here you go. We are at session highs here right now, just about half an hour into the trade. And we are set for this first monthly gain for the HSI since April. So it's been a pretty good session here so far, 1%. We're seeing that very much extend the ascent here when it comes to CSI 300 of gains of 1% as well. So it looks like equities are, and modestly speaking, are bid up. But yeah, we're getting ever so closer to that 18,000 level day, which you say, pretty important marker there.
Yeah, I think we haven't been here in about six weeks or so. I mean, it's quite rare. So I'm just looking at my equity board here. So I'll take you through the superlatives in just a moment here. But yeah, I mean, it's rare that you see China and Hong Kong outperforming the broader benchmark, the broader region. We're up 1% on both the CSI 300 and the Hang Seng Index. Let me just, by the way, minor correction here. So the Hang Seng Index is actually on track for a positive August. It's the first monthly gain since May. So we were actually up since May right now. Yeah, some of the screens can get a little bit confusing. But yeah, can we get the superlatives? I wasn't able to get to it, actually. Just to wrap up really how good August was been. So the dollar is actually on track for quite a steep drop this month. Yvonne was highlighting the wild range that we've seen in the Nikkei 225, about 8,000 points.
Close to 8,000 yen.
Haven't seen it in 30-plus years on that. Despite the drag we're getting from the big tech, non-big tech dependent benchmarks like the Dow Jones, the S&P 500 equal weighted index, Europe's done exceptionally well. The DAX and the Stoxx 600 yesterday are hitting a record. The Chinese currency, we talked about this on the dollar unwind. And here in the Asia Pacific, on an equity basis, the ASX 200 is actually very close to its own record, too. So we're about half of 1% to that. So, yeah, Asia ex-China, the benchmark is looking like this, please. Let's flash that on your screens. There we go. And a lot of the gains right now is because, or coming from the tailwinds in this greater Chinese equity market.
Yep, so we're obviously taking a look at what's been going on. Global stocks are still on track for one of the best months, I believe, we've seen the last 2 months or so. The dollar is certainly one that's still a talker here because it seems like, I like this line from TD Securities, that there's been so much focus on the U.S. growth story. But it seems like investors are overlooking what's going on globally, which is overall also a slowing down economies, right? They have a pretty interesting call when it comes to the Kiwi dollar. They're targeting about 4% loss for that trade. Because of what's been going on, not just the domestic side of things, but just how risk sensitive this currency is to, of course, rates, global risk, the like. But yeah, so that was one I thought was pretty interesting in terms of FX positioning around the dollar here right now.
Yeah.
It still seems like consensus is it's going to go lower, but you can't overlook what else is going on overseas.
No, not at all. And I think, we move into September where it's quite pivotal because we might actually get the Fed cut for the first time in a cycle. We have the jobs report. And September also seasonally is one of the worst months for equity markets.
Yeah.
So you do understand, I guess, we were having this conversation yesterday on why the market seemed to have some indigestion looking at the NVIDIA results. And because the positioning was already quite crowded going into seasonally not a very good month for equity markets, generally speaking, so maybe this rotation out. Let's talk about politics, shall we? So you have the U.S. Democratic presidential candidate Kamala Harris, given her first TV interview since her nomination. She was speaking with CNN. Take a listen to some of those highlights.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing. And I made that clear on the debate stage in 2020, that I would not ban fracking. As vice president, I did not ban fracking. As president, I will not ban fracking. There should be consequence. We have laws that have to be followed and enforced, that address and deal with people who cross our border illegally. And I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican. We have to get a deal done. This war must end. In the meantime, and we must get a deal that is about getting the hostages out. I've met with the families of the American hostages. Let's get the hostages out. Let's get the ceasefire done.
Let's bring in Derek Wallbank, our Bloomberg editor, joining us with this. And I'm guessing you watched this interview, Derek. It seems like she took a bit of time to talk about, her values haven't changed. The critics have talked about she needs to explain why she's kind of switched her policy stance when it comes to issues like immigration, fracking, for example. Do you think she did that sort of job here today?
Yeah, Yvonne, I think one of the questions that had been lobbed at Harris is that she hadn't necessarily sat down for a big kind of media interview with a major media organization where her campaign wasn't necessarily the one setting the agenda, right? And so that happened today. Dana Bash is a longtime pro. I covered Congress with her back in the day when I had hair. It was a long while ago, but she's been there. She was there before I got there. She's been there really a long time, and she's really good, and she knows her stuff. And she put a lot of hard questions to both Kamala Harris and Tim Walz. They were handled pretty well, from what I could tell. She explained away some differences between when she ran for president the last time and now. Certainly she's had, nearly 4 years as vice president, among other differences between then and now. And so she's running her own race, right? She didn't draw a giant contrast with the Biden administration, with her current boss, Joe Biden. But there are some, some signs that there may be some shifts. I think one of the biggest things that I would note is that this campaign seems, and this interview was a good example of it, seems to not be relying so much on let's get a deal through Congress and what will Republicans say and things. Kamala Harris was talking a lot about executive actions she could take, about appointments that she could make. Her grocery plan is a great example of that. Part of that is to talk about M&A and to talk about, what regulatory oversight looks like. Congress doesn't need to do anything for a lot of that, right? And so this is a campaign that really is cognizant of what it can do and what it needs help from the other side on, but also what it doesn't. She did go, and it was played in the intro here, she did go talk about that she's willing to have a Republican serve in her cabinet. That's something that Democratic presidents of late have wanted to do. And Kamala Harris certainly had quite a few Republicans on the convention stage who might make interesting choices for a cabinet for her.
Derek, and just let's put everything together now. So our latest Bloomberg News morning consult poll shows that the momentum, she is still enjoying some of the early momentum earlier on, and in fact is now leading, in some cases, Donald Trump. And I want to get your thoughts on this too. Like, a state like Arizona, for example, which is a border state, and immigration and border security were two issues where perhaps she wasn't perceived to be doing as strong. why is she doing so well, effectively, is my question.
Well, it's interesting, David. I think, part of this is that Kamala Harris has run one of the best months in campaign history, recent campaign history. She's had a very smooth rollout, and her convention just happened. Traditionally, candidates do enjoy a post-convention bump in the polls, so you do have to take that with a certain grain of salt. But look, I've gone through the numbers here. If you plot all of this out on an electoral map, assuming these numbers were to hold, just to give a sense of where she is in this race, if these numbers were to hold on Election Day, not only would Harris win, but she'd win with about 2 states to spare, no matter how you kind of put those together. What she's done effectively, and I think this is the important point as you're looking at these maps and thinking, through the U.S.'s somewhat complicated way of electing a president, is she's opened up another pathway for herself to win, right? We have been talking for a long time about the Rust Belt and the Midwest, Wisconsin, Pennsylvania, Michigan, sweeping all those three, putting her in. But she's opened a Sun Belt pathway, and we're talking there about Arizona, about Georgia, North Carolina, Nevada. Our poll shows leads in 3 of those 4 states, and that allows her to talk about maybe some different issues because they're not the same states. They don't necessarily have the same economic pictures. And so it allows her kind of a breathing room and a freedom to kind of try and make the map up in different ways. And I'll also say in a lot of those places, you're not looking at the same states you looked at 4 years ago. Several of them, Arizona's one. There's been quite a lot of in-migration. And so Harris will be talking in some cases to a slightly different electorate than Joe Biden was 4 years ago.
Derek, thank you. Derek Wellbank there, Bloomberg editor, with the latest on that Harris interview speaking at CNN. Well, switching gears to markets now, let's bring in our MLS strategist, Mark Cranfield, joining us. Mark, we got through the NVIDIA earnings. They were brutal, but it seems like right now equity markets are doing fine. Well, what's on top of mind for you today?
I wouldn't read too much into what we're seeing in Asia this morning. It is the last trading day of the month, and you always get some distortions there with some portfolio switches. It's probably not going to be heavy volumes today. Don't forget, it is Labor Day weekend in the US. I think we get a much better read on what the world views, or certainly what traders view the world, next week when people come back. It's traditionally the time when people start to think about where they're going for the rest of the year, where they're going to put their positions. And if you look at, yes, the background suggests the Federal Reserve is going to start lowering interest rates. US GDP just came in slightly stronger than expected. Consumers seem to be doing okay. The employment situation is a little bit shaky, but we know all these things. All these things have been there for a while. People, traders especially, will need new factors to get them to push further ahead. If they want to be bullish on equities especially, they will need some fresh indicators to be able to do that. And when they come back from their Labor Day break, they're probably going to start also thinking about the US elections, which one way or another are probably going to get more ugly than they've been already. That will give them some uncertainty, some reason to pause as well. So if you put all those things together, it's going to need something really strongly bullish, something fresh to get them going to put new money into the market. And I don't see that happening in the next few days, especially when you've got an employment report at the end of the week, which is likely to decide whether the Fed moves small or moves big.
Yeah, which is, I think, the September 19, if my memory serves me right, was the Fed meeting. And Mark, a day after that, September 20 is, I believe, the BOJ meeting. So that's 24, 36 hours of a purgatory, if you will, for markets. And the reason I bring the BOJ up, this Tokyo CPI print, which is, I guess, in many ways representative of what we could get nationally, came in at above the highest economist estimate out there. So it came in quite hot. But might that properly put back a rate hike back on the table for the BOJ on September 20?
I think after all they've said, and Mr. Ueda being dragged before Parliament as well to explain himself, I think it's unlikely they will go in September, but I think it's a very high probability. It's very much on the table for October. But then I think that was always going to be the outlook anyway. The Bank of Japan rarely do back-to-back rate changes. So they did move at the previous meeting. It's low probability they will move successively. But what it probably does do is it means that they could well now be on to a 25 basis point cycle. So Now that they've got the rate up to 0.25, expectations will be that the next move, which could be in October, is a 25 basis points move rather than a 10 or a 15 basis points move. It looks as though they're trying to get themselves in line with what is the norm in the G10 central bank space to move in increments of 25, although some people are talking about 50 for the Fed, but that's probably too far for the Bank of Japan. So it's certainly what Tokyo inflation has done today in the mind of traders. Look at the reaction in the JGBs today. They now think that the chance of October is very live, but there's more pricing to be done. You'll probably now see the short end of the Japanese curve really start to price in a good chance for a rate hike. And if by the time the Bank of Japan gets there, and the market has already priced it, the Bank of Japan can safely deliver the rate hike that they've probably been thinking about for some time.
Mark. Thanks. Mark Cranfield there, our Bloomberg MLI strategist joining us out of Singapore. Still ahead on the China Show, HSBC Qianhai Securities joins us to share their views on China's EV sector as earnings season nears its end. That is next. This is Bloomberg.
Welcome back. You're watching the China Show. We're about 80% into or through the earnings season in China. We have a couple of big names still to come out today and a few more scattered early next week. But suffice to say, we're almost at the finish line here. As it pertains to EVs, very much, of course, in focus here, you have Great Wall Motor reporting net income of just under $1 billion for the first half of this year. So in terms of revenue and the change, it's a 31% jump to about 12.3 billion. Meanwhile, you have SAIC Motor first half net income coming in $934 million. That's US dollars here as an ongoing on-year decline rather of about 6.5%. But it's really BYD that is starting to squeeze the smaller players in this market. 24% jump in first half net income at just under $2 billion. Let's get a sense of where these car makers are stacked at the moment going into traditionally a hot buying season in the auto space. Joining us here on set is Yuqian, head of China Autos Research at HSBC Qianhai Securities. Good morning and nice to see you in person.
Good to meet you guys.
So what do you make of this earnings season? What stood out to you the most?
Yeah, I would say in general, most of the second quarter earnings print has been strong because first quarter is being a low season. Second quarter, quarter-on-quarter perspective, the volume being up for most of the EV players. Although during the earnings season, another key focus other than the result would be the outlook into the second half. So especially July, August is the typical low season, and it didn't really perform. Although mixed perspective for the first 25 days of August, the EV penetration breaking 55%, but we are now heading into the high season. So last year, high season wasn't very high, so the market was expecting with a strong model pipeline to play out in the coming 2 months. We noticed XPeng has been launching a new model this week, and in the next month, NIO's Envoy model to be coming soon, and BYD have a strong pipeline based on the second quarter, what they just announced, the 5th generation of plug-in hybrid platform. Yeah. So based on that platform, they probably refresh most of their portfolio by the end of the year. So we do expect a strong model supply. And I would want to highlight another thing. By the end of July, the government has been doubled down the trading policy. And in August, there's a couple of local government also following this subsidy and giving more support locally. So we had a bit of wait and see. Maybe we can get a better deal. So with a bit of pent-up demand to be released in the coming 2 months, we do expect we have a good confidence and conviction that month-on-month perspective we might see improvement into September high season.
Right. Okay. So you mentioned about new model lineups. You mentioned about the trade-in programs. When it comes to margins then, I mean, I think BYD was able to do 20% margins. Li Auto, Tesla also maintained double digits. Is that sustainable then, given that you think the pricing dynamics are going to be improving into the fourth quarter?
Yeah, great question. That's another key focus. I would say, although it's deviate player by player, but I would generally classify there's a couple of things we should be looking at that has been the key driver for the margin for these various OEMs. The overseas mix. overseas currently generate a higher margin because of the more favorable competition and pricing environment.
Yep.
So if the overseas mix increasing, that's a strong margin support. And second is the product mix. If you are launching more high-end product, if you are refreshing with the new technology such as BYD, the fifth generation product definitely have more pricing power than the previously last generation product. I would say product mix is a key factors. Taking Geely, for example, if Zeekr continue to sell more, that will bring up the product and average selling price mix, and that's a strong margin support. And then that's the economic of scale. If you can increase the volume, then economic scale should be another key support to the margin. Of course, the negative factors we keep watching is the channel discount. So if the company is introducing more discount in order to push up the sales or meet the target, or destocking, that's another factor to watch. But net, we will evaluate these angles for various players.
I think we spoke with BYD earlier in the week. To your point that overseas, that's where the margins are. And I think Stella Lee mentioned that at some point they do see sales, overseas sales, to make up half, if not more than half, of their total revenues. When do you see that happening for BYD? In other words, when does BYD become a proper global automaker?
Yeah, that's a billion-dollar question. I would say, yeah, we do spend a lot of time talking and researching about the EV going global and BYD being a key player. So we've been more focusing on the China brand, who is a Chinese management operation and their global footprint. So as far as we can see, the global going global story is really breaking down into two parts: the localization and the export. Okay. So the companies who has been championing the localization, which will help them better mitigate the potential tariff and the trade environment risk, would be the one who is most favorable, and that's BYD. So BYD just completed their Thailand plant by the end of first half, and their Brazil plant will be coming online next year. Indonesia plant the year after. They are also kicking off 2 plants in Hungary and Turkey in Europe. So they are in one of the best shape to tackle the global opportunity. Although we're conscious of the complicated and challenging trade environment, we would say the key focus would be the emerging market, namely ASEAN, South America, and the Middle East.
Okay. Domestically, though, when do you think this price war, are you seeing signs of it easing already?
Yeah, that's another billion-dollar question. I would say we're currently in process of the China EV consolidation. We see that happening. The top 10 market players market share has been concentrated to 80% from 70% in the past 2 years.
Wow.
So we are in the middle of that, and the sector EV leaders used to comment 24, 25, 26 could be 3 years of consolidation. We are probably right in the middle of that. So I would argue, in the process of consolidation, it's a temporary value destroy for the sector until we reach the inflection point. So before that, I would say pricing pressure is part of life now, but pricing war is on and off. We had it on for the first quarter. After BYD had the Glory version, which is a budget version introduced, that has been pressure on most of the market player, which they're price taker. But in the second quarter, we see that tactic has been working, and they're introducing the new technology, increasing the pricing power, so the market leader don't have to do that. So there's also more new supply pumping into the market. So second quarter, we've been quite confident. Temporarily, that's going to be an off chapter. So third quarter, we see the pricing pressure getting higher, but now it's tapering off a little bit. Okay. As we talked earlier, there's new model supply. When you launch a new model, you tend to be more disciplined in the channel discount. And we're talking about the demand dynamic should be picking up with more government support and the pent-up demand to be released. Usually when the demand dynamic trending well, the pricing pressure tend to ease temporarily. So I think the pressure is constant until we reach the inflection. But in the near term, we indeed are sailing into a better pricing dynamic chapter for the next months.
All right, Yuqian, it's great to have you here.
Wow.
Please come back more. Yuqian Ding, Head of China Autos Research at HSBC Qianhai Securities. I think David's a bit speechless. Yeah. All right, we got plenty more ahead.
I have
this
more
is
questions.
Bloomberg.
I'll ask you in a bit.
All right. right, we're heading into, of course, that right now, Friday, it's really counting down to the weekend. And take a look at how we're checking on when it comes to movers. The steel makers, as like here, Nippon Steel calling for Japan to impose tariffs on Chinese steel. We're seeing actually Bao Steel also seeing gains of 1% here today. Of course, we've been tracking, of course, when it comes to iron ore, there has been a little bit of improvement, although we are seeing the futures in Singapore slightly lower this morning. And we're watching 7 and 9. So there's been a lot of developments when it comes to what's been going on with this potential deal with Couche-Tard. So said to be seeking pension fund cash for the bid for the Japanese company. We are seeing shares down some 1.6%.
Yeah, there we go. So the story hasn't concluded just yet. In fact, it's gotten a lot more complicated this week. We're headed towards the Japanese lunch break soon, of course, and just ahead here and shows we're back to Hong Kong, where a court has convicted 2 former editors over articles written about democracy activists. The details up ahead. This is Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break here today. And of course, we are seeing some gains across the board when it comes to equities here in the region. But yes, we're still kind of digesting that Tokyo CPI print, which was a little bit hotter than expected. That's what you're seeing, a little bit of movement in those JGBs. We're up 1 basis points, and there's a bit of strength heading into the yen as well. But of course, we are on course, one of the worst months for the Bloomberg Dollar Index all year already. Stocks, though, still doing okay, Dave.
Yeah, the dollar index is, in fact, this month touched its 100-week moving average for the first time, I think, in 3 years. So that's really come a very long way. In terms of sector groups on your screen, so just about every single one is up, with the exception of obviously a few. Industrials are leading these gains today. And the reason that's important is you look at a market that is outperforming so far in the last, 2 weeks or so, which is the ASX 200, which is across Asia Pacific, the closest to its own all-time high. I think we're about 0.5% away from a new record there over in Australia. 0.6% to the upsides here. Okay, let's turn our attention now to our China brief and a look at what's making headlines in national media. The Securities Times is reporting, we talked about cars in the earlier segment, BYD is recruiting 10,000 workers for its Shenzhen Shantou Park. Now, it says that there's a talent gap in the EV industry, as many young people are reluctant to now work in factories. Now, an expert tells the paper that there's also this mismatch between skills needed in the industry and also China's pool of qualified workers. Meanwhile, in the China Securities Journal here, the newspaper is flagging this rise in the secondary bond funds. The report says the product is becoming more popular, with total issuance so far this year exceeding levels last seen, well, of course, last year. Now, it cites several industry insiders who point to investors' declining risk appetite as stocks, of course, Yvonne, continue to fluctuate.
And President Xi's meeting with U.S. National Security Advisor Jake-Sullivan is topping today's news agenda. The Communist Party's official mouthpiece, People's Daily, is running the story with a photo of their handshake on the front page. Now, it quotes Xi extensively, including his message that China is committed to stable, healthy, and sustainable relations with the U.S. Sullivan, on the other hand, reportedly assured China the U.S. does not seek conflict and thanked Xi for meeting him. Let's get to our China correspondent, Min Lo, who's been watching, of course, this meeting and Sullivan's trip. What did we learn this week?
Yeah, so it was a talk about talks, because the two sides have agreed to, talks between the military commanders and then exchanges between the commerce officials. You have the U.S. climate envoy traveling to Beijing sometime in the first week of September, and a call between the two presidents that could maybe lay the path for an in-person meeting, maybe on the sidelines of the G20 summit in Brazil or the APEC summit in Peru. And this was an opportunity for President Xi to speak with someone who is the architect of those U.S. tech curbs on China. And just today we're hearing that ASML is, planning to stop servicing those equipments that they have sold to China, very much because of U.S. pressure as well. So all of these very intractable issues, from the tech curbs and investment restrictions to the South China Sea and Taiwan, neither side willing to compromise here. But you get a sense that both sides are trying to squeeze in all these meetings before the end of the Biden administration, maybe to kind of lay the path for a very smooth transition of power.
I think it was at the end of the briefing, Jake Sullivan also talked about or touted Kamala Harris as someone who could potentially carry this relationship forward?
Yeah, he was kind of, setting the stage for Kamala Harris, establishing her credentials in the foreign policy front, especially given that she has been facing some criticisms about her lack of interactions with China, especially compared to her vice presidential candidate, Tim Walz, who has been to China 30 times. She has never been to China during her time as vice president. She's met President Xi very briefly on the sidelines of the APEC summit in Thailand in 2022. So Sullivan got a chance to discuss the elections with the Chinese officials and to talk about his experience working with Kamala Harris, and in some ways, kind of laying the path for a potential transition to a Harris presidency, and some analysts say to Trump-proof the relationship to ensure that all the progress that's been made so far would not be undone by a potential Trump presidency. And also, I guess the U.S. also wants to ensure that there wouldn't be any surprises in the next couple of months that would suddenly turn China into a big campaign issue that could sway voters in a big way.
Okay, Min Min, thank you so much. Min Min Lo, our China correspondent there. We'll return to the Kamala Harris angle in just a moment here. Just some breaking news out of China here. So the NDRC, that's the economic plan. And by the way, we don't have a lot of details on this just yet. That especially effectively saying in the briefing taking place right now that China will be imposing special market access rules on areas like AI and new energy there. That's according to the NDRC officials speaking at this briefing taking place right now. More details, of course, forthcoming there.
Okay. In the meantime, we're talking a bit more about U.S. politics. Democratic presidential nominee Kamala Harris says her top priority, if she wins the election, will be helping middle-class Americans address economic concerns, including inflation. Harris spoke with CNN in her first TV interview since replacing Joe Biden as candidate.
I will tell you, first and foremost, one of my highest priorities is to do what we can to support and strengthen the middle class. When I look at the aspirations, the goals, the ambitions of the American people, I think that people are ready for a new way forward, in a way that generations of Americans have been fueled by hope and by optimism. I think, sadly, in the last decade, we have had in the former president someone who has really been pushing an agenda and in an environment that is about diminishing the character and the strength of who we are as Americans, really dividing our nation. And I think people are ready to turn the page on that.
So what would you do day one?
Day one, it's going to be about, one, implementing my plan for what I call an opportunity economy. I've already laid out a number of proposals in that regard, which include what we're going to do to bring down the cost of everyday goods, what we're going to do to invest in America's small businesses, what we're going to do to invest in families, for example, extending the child tax credit to $6,000 for families for the first year of their child's life, to help them buy a car seat, to help them buy baby clothes, a crib. There's the work that we're going to do that is about investing in the American family around affordable housing, a big issue in our country right now. So there are a number of things on day one.
There we go. Kamala Harris there speaking with CNN. In fact, that interview just concluded just over an hour back. Right, back here in Hong Kong, a Hong Kong court has convicted journalists of sedition for the first time in decades. Let's bring in Rebecca Chung-Wilkins, our Asia government and economy correspondent, joining us right now to walk us through the details of that verdict yesterday.
Yeah, so two top editors from Stand News, which was a publication that rose to prominence really in 2019, extensively covering the protests, have been charged with sedition, as well as the parent company of Stand News, who was effectively not represented but legally. And it's significant because it's the first time in decades since 1997, when Hong Kong returned to Chinese rule, that we've actually seen journalists charged under this sedition case. And the prosecution put forward 17 articles that it said showed were evidence of this sedition. 11 of those articles, the court ruled, did show this sedition intention. Many of the articles were interviews with pro-democracy activists. There were mentions also that they had essentially incited hatred against the central authorities, against the Hong Kong government. So some quite sharp criticism in the judgment.
And this trial is sort of seen as a barometer of press freedoms in Hong Kong. What does it tell you about maybe what's to come?
Yeah, absolutely. I think it was really closely watched. And it did strike me, the courtroom itself, I was there, and then the overflow room, both full with press, members of the public, and of course, as expected, lots of diplomats from various missions. And we do have that international concern reflected in some of the responses. The US spokesperson was there. She told me that the US, urges Beijing and Hong Kong to continue to allow journalists to do their jobs, very clearly saying that journalism is not a crime, and that criticism of the ruling was echoed statements from the UK as well as from the EU. Now, the Hong Kong government has said that the ruling today is a good thing essentially, and reinforces Hong Kong and the rule of law and so on. But it is certainly a concern. Hong Kong used to be sort of really well known as this vibrant haven of many different diverse media voices, and that has drastically changed over the past 5 years or so.
Rebecca, thank you so much. Rebecca Chung-Wilkins, our Asia government and economy correspondent there. A brief look at markets about an hour into the session, and what a move up in price we're seeing right now, particularly in tech. HS Tech up 2%. Volumes are light in Hong Kong, although extremely heavy compared to recent averages. When you look at this price move on the mainland, 1% up on the CSI 300. Volumes are about 40% heavier than usual for this time of the day. Plenty more ahead.
There's a bit of it. It's huge. All right, in some other news that we're following this morning, Bloomberg has learned the Netherlands plans to limit ASML's ability to repair and maintain its semiconductor equipment for Chinese customers. Sources say the Dutch government will probably not renew some ASML licenses to service and provide spare parts in China that expire at year-end. Withdrawing maintenance support could render chip-making equipment inoperable as soon as next year.
Now, NVIDIA is said to be discussing joining a funding round for OpenAI that could help value the AI startup at over $100 billion. Our sources also say Apple and Microsoft have been involved in talks about participating in that same funding round. Now, if discussions do move forward, it would mean the three most valuable tech companies globally were all backing OpenAI. Now, despite investor disappointments in its latest sales outlook, NVIDIA remains one of the world's main players in AI, and our team at Bloomberg Originals has been looking at the chip company's humble beginnings and how this gamer tech laid the foundation for its meteoric rise.
NVIDIA, now one of the world's most valuable companies, emerged from an industry often misunderstood: gaming.
This is the Xbox.
The public witnessed the first major triumph when, in 2001, Microsoft's then CEO Bill Gates decloaked his company's inaugural competitor in the console gaming battlefield. It was a vital stepping stone that aligned NVIDIA hardware with PCs bought by hardcore gamers keen on upgrading their computers' components, something they couldn't do with consoles.
But something else happened during those 20 or so years. People started to ask, if these things are so good at transforming code into people and vehicles, could it work the other way around?
GPUs excel at something called parallel computing, taking a complex problem, dividing it up into small sets of calculations, and solving them in parallel very quickly.
A lot of the time, you see that there are runs on these graphics cards because they have a lot of applications even outside of gaming.
More recently, companies acquire GPUs en masse for use with artificial intelligence. OpenAI's ChatGPT, for instance, uses NVIDIA hardware. NVIDIA became the leader it is today by advancing technology designed for games but valuable to disparate industries. It knew far in advance that to succeed, it needed gamers.
And subscribers can watch that Bloomberg Originals documentary in full right now. It's on the terminal and on Bloomberg.com. It can also be up on their YouTube channel later on today. All right, in other stories that we're tracking for you, Lululemon has trimmed its sales and profit outlook for the year as inflation and increased competition curbed demand for its pricey yoga pants. Comparable U.S. store sales fell 3% in the second quarter, missing analysts' expectations. Jeffries says fashion is shifting further away from Lulu's core offering, but Webush thinks the guidance cut could offer investors a reset. Bloomberg's been told that Samsung is among the suitors interested in Nokia's mobile network assets, and sources say Nokia has considered several scenarios, from selling some or all of the division to spinning it off or combining with a rival. That's amid increasing pressure to find new growth in the troubled telecom equipment sector.
Now, Nippon Steel says the Japanese government needs to impose an anti-dumping tariff on Chinese exports to protect the domestic industry. The company says the firm is lobbying the government on this issue alongside other steel makers. Now, it says others, including the U.S., Europe, and South Korea, have already done so, leaving Japan quite vulnerable if it doesn't follow suit. Right. Japan's support for the natural gas industry has fueled this rapid expansion of its, $250 billion LNG market. That's over the last, 50 years or so. Now, the country has few gas reserves of its own, but has made itself quite indispensable at every link across this global supply chain. Let's bring in our senior energy reporter, Stephen Stapczynski, has more of today's very complex, big take, but Stephen, of course, of all people, is probably best positioned to simplify this for us. I guess we'll start off with how was Japan able to actually simplify this, the LNG industry? Can you explain how key Japan is and central to all of this?
I've interviewed a lot of people for this story, and every step along the line, I was speaking to folks, and they were saying that Japan, if it weren't for Japan, we wouldn't have an industry here today. From Australia to Brunei to Malaysia to other places, there just would not be an LNG industry, because they not only provided the backing in the form of long-term contracts to support these giant liquefied natural gas facilities. They cost tens of billions of dollars. They provided the financing. They provided the technology. They provided loans, both public and private, from commercial banks. And then they also provided the ships. Japan essentially invented how these LNG vessels, they liquefy the gas and they put it in these thermoses, essentially. And that helps them with moving the ships and the gas around the world. So if it weren't for Japan, a lot of the industry wouldn't exist. And for a long time, Japan was the world's biggest LNG buyer. Now, moving forward, Japanese LNG demand is going to likely fall. But that isn't going to reduce their exposure to the industry, just because they're so paramount to it, as well as providing support, technology, as well as know-how for countries that want to import LNG themselves.
Yeah, so you look at the global LNG supply chain, Stephen. Can you put into numbers, quantify just how big Japan's exposure is?
So what's actually really interesting is, for this big take story, we did an exclusive analysis on how much profit Japanese companies make from gas-related businesses. And we discovered that it was at least $14 billion, and a very conservative estimate, from things like trading, production, transport, technology, financing, all of that together, $14 billion. To put that into context, that was the last fiscal year. That's about equal to the same amount of profit from Japan's biggest consumer electronic companies. So, when you think of Japan as, the home of Sony and Nintendo, you also have to remember that Japan is also home to these giant companies that facilitate the production and trade of natural gas around the world.
Okay, so how important then is the world getting Japanese support in terms of meeting global climate goals then?
So that's part of the issue, right? There is this climate debate. Yeah. So you have clearly a fossil fuel that countries are committing to. And while gas, compared to coal, emits half the amount of CO2 when combusted at power plants, which can help reduce emissions, it still is a fossil fuel. And there's this argument that if you are getting countries, especially in Southeast Asia, committed to building Japan-financed and backed power plants that depend on gas, then for decades they're going to be using this infrastructure instead of quickly shifting to renewables. So that's sort of the environmental argument there, that Japan is helping to prop up this industry, while even the Biden administration, the U.S. is the world's biggest LNG exporter on earth, but the Biden administration is still taking a pause at approving new LNG export plants because they want to look at the climate impact. Meanwhile, Japan is pushing forward with providing public financing to get plants built from places like Thailand, as well as in Southeast Asia, all the way to Mexico as well. So that's sort of the argument there. Are you getting the world addicted to gas, or are you using it as a bridge to a cleaner future?
Very interesting, Stephen. Thank you so much. Stephen Sapchinsky there, our senior energy reporter, with today's Big Take. We got plenty more ahead. This is Bloomberg.
Right, welcome back. So this is something we haven't seen recently. So going into today, we were down 4 straight days. In fact, in the last 2 weeks, I think we've only closed higher just once or twice on this specific benchmark, and yet here we are. And maybe because of that, here we are, 1.5% to the upside, something we don't normally see. Extremely heavy volumes, about 40% heavier than usual. 9 out of the 10 sector groups are moving higher. About 260 stocks on the benchmark are trading higher as well. So it looks to be a broad-based rally. We'd also note that yesterday we closed below the 3,300 level, and we did see a pickup in some of the turnover on these ETF tracker, ETFs that we effectively look at for any signs of state support, but that's probably what we're getting, or maybe we're getting something more beyond that too. The Chinese stocks are easily the outperforming group today across the region.
I mean, given that they were basically underperforming much other markets for most of the last month or so, it certainly is one to watch. Is it month-end rebalancing? Is it state support? That certainly is the questions that we're asking. There's also been some sentiment that's been boosted by maybe upbeat earnings, right? The likes of New Hope Dairy, Foshan Haitian, Great Wall Motor as well. That is kind of lifting the index a bit. Marvin Chen from BI says maybe it's just because just overall U.S. eco data is lifting sentiment across Asia. You also have talks between Xi and Sullivan that have just ended and wrapped up as well. So maybe the potential for further higher level talks going forward as well.
Yeah, I hear the ETFs, right, that go into that as well. And we talked about how it could be a good or bad thing depending on the direction of global stocks. But this is really one uncorrelated asset that if you had to pick a hedge, this was probably it. To Yvonne's point and Marvin Chen, the advice, the list from the folks at BI and most of the equity strategists we talked to is lean into growth, but also balance at risk with a barbell strategy and income. Is so far what we're hearing. Okay, there's one story that's brewing here in Hong Kong. Let's get shares of New World up, please, if we can. So this is according to the Tsingtao that, well, the company which we know, of course, the chatter in the market is there too much leverage in the company? We understand is getting approached here in terms of one of its Hong Kong malls. That's what we know so far here. $1.2 billion offer for K11 Art Mall, which is, of course, in the shopping district across from where we are here in Central. That's what we know so far. No other details or indication that the deal will go forward as well. Right, EVs, very much in focus too, given, of course, all the earnings that have come through. Let's flip the boards very, very quickly. There we go. Great Motor, to Yvonne's point earlier on earnings, very good set of numbers there. And, of course, some of the chips in focus. Let's flip the boards, please, very, very quickly and have a look at the chip space, because we're going into the weekends, and the big event, I think, this time tomorrow will be the PMI numbers coming through as well. So stay tuned for that. We'll wrap those things, of course, on Monday. And here's a look at some of the chips.
And don't forget, Oasis tickets start selling, I think, over this weekend as well.
Oh, yeah.
Yeah, it's going to be busy. Okay. Which one you choose to watch, PMIs or Oasis?
PMI!
That's it for us here at Bloomberg Markets Asia.
Happy Friday.
Is up next.